Are you ready? Let's go.
Hello, wonderful people, and welcome back to the hashtag IRL Training Value First Approach series. Here it's all about bringing you content that adds real value to your business, no strings attached. I'm so excited to have you here for our second video. Today I'll guide you through creating a business budget in Microsoft Excel. We'll dive into Excel's formula features, which makes calculations a breeze. No more manual math. If you're on our mailing list, keep an eye out for a free business budget template ready for you to download and use. And if you're not signed up yet, just follow the link below to join and get access to helpful resources and templates like this. I know your time is valuable, so feel free to adjust the speed, double it up if you're in a hurry, or slow it down if you want to take things step by step. This video will be here whenever you need it. All right, let's jump in and get budgeting. Right, this is our budget report template. It is a very basic template with budget figures only. At a later date, I will show you how to incorporate your actuals and how to generate a report of budget versus actuals and show you the variances between the two. So for right now, we're just going to stick with this very basic format. If you do have an accounting package such as Sage or Xero, they have the facility or the functionality to actually capture your budget within the system. It's a great option to use because it already has all the accounts that you have set up within your system specific for your business. And you can also pull budget versus actual reporting. And you can also use Sage Accounting Intelligent Reporting to dive deeper into those figures. But for right now, if you're working in Excel, that's absolutely fine. I'm going to show you how to generate this template in Excel. Excellent. So this is what will be sent to our mailing list subscribers. Look out for it. There's not too much that goes into it. It's just a lot of data and a lot of numbers, but it is crucial in helping you make informed decisions. Excellent. So we are going to start with a blank Excel workbook. Just remember to save your file. You can name it whatever you want. And save it in a place where you know you can find it. Excellent. Okay, so we're going to start with a heading. I'm going to add in the company name. I'm using PTY Limited here, but this spreadsheet is critical for registered business as much as it is for sole proprietors. Excellent. And the date range for the report. Okay, and we're going to say that this is Yo, leaping to the very far future. Excellent. So for this report, you can really decide how you want to format it. You cannot format it at all. It's really up to you. I just formatted it in a way that makes it easy for me to read it and to understand it. Okay, so now we're going to start with the headings. So in this report that is being sent out, you'll see there's a column here for the financial year end 2024. This is the prior year's end of year figures that we've brought into this budget. And that's simply then to add on a percentage increase to forecast for the next year. If you're a new business, you won't have these figures and you will be inputting basically fresh data. Okay, so we're going to omit the carry forward, but you can also include it. I'm going to include it here just in case you need it. And we can go from there. Right. March 2024 is our start month. You can see how it's formatted my date. Okay. You can use any date formatting that works for you. If you do want to use the short date, but it automatically defaults to the short date formatting, you can just come up here to number formatting, click on this little downward arrow. You're going to go to custom formatting. Where it says type, you can literally remove what is in there and you can type month, 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 dash, year. So it's the short format month and the last 2 digits of the year, and you will get that formatting. Excellent. Okay, so we want to carry this data over to February 2025. So I'm going to click on the cell and I'm going to get the little black cross. I'm going to click and hold down on my mouse and I'm just going to drag it across, and you can see it's showing me which date I'm at. There you go. I'm at February 2025. That's where I want to be. And then I'll have a total column. Okay. So I'm not going to retype all of these things. We will be here forever and an age. So I'm just going to carry in the information from the template. Okay, I do want a little line in there. You'll see mine has a lot of lines in between, and I just use that for formatting later, and I will show you how we do that. Okay, so all these little extra lines, I'm going to just make them a lot narrower. So I'm going to select the lines. I'm going to right click. I'm going to say row height. I'm going to change the row height to 5, and you'll see it makes lots of small little lines for me there. Okay, let's do these ones down here at the bottom. Right click, row height, 5. Excellent. Okay. Now what I want to do is I want to bring in a little line separator. You can use any line or any border formatting. I just like the little dashed line. So I'm going to go to borders, more borders. I'm going to select the little dashed line and I'm going to place it in there. And I say, okay, and you can see I've got a little dashed line there now. So I can now repeat that by pressing F4. So I'm going to select where I want it next, and I'm going to select F4, which repeats my last action, which was putting in the little dashed line. And I'm just going to repeat that action as many times as I need to. Okay, I'm going to give this some color. Just keep in mind that if you are wanting to print these types of reports, not to put in too many colors. I know you can later print it to grayscale or black and white, but just keep printing in mind when you are formatting. I actually want to put this, so I'm highlighting all the cells across this section, and I'm going to use this merge and center functionality, and you can see it's dropped. It's actually combined all of these cells to create one cell. It's now dropped it at the bottom, and I'm using this little middle align right there to align it to the middle, and I'll make that a bit bigger. I'm going to do the same with the company name. Align it to the middle. Give it a different color. Okay. So here we have the basic setup for our, just want to quickly change the column width here. I'm just clearing everything in these little columns so that we can see a clear distinction between the financial year-end figures of the previous year and our current budget. So you can see we've now made a nice clear indication of where this is. Again, the formatting is entirely up to you and how you want to view your worksheet. Right, I want to make sure that all of these columns are the same size and that my numbers fit in properly. If you watched the previous video, you would know that if your column width is too small and your data in the cell is too long, might not do it for me now, you will get a bunch of hashtags. And so what we want to do is we want to make sure that our columns are wide enough to display the data. Okay, perfect. I'm going to center align these. So if you have financial data from your previous financial year in, absolutely bring it in here. And when you forecasting, you want to make sure that you include or incorporate some sort of escalation. Okay, so most of your expenses, your suppliers are going to increase by 6 to 10%, and you need to be able to factor that into your budget. So if you have historical figures that you can start with to forecast for the next financial year, it gives you a great foundation because you will have actual figures to work with. However, if you're a new business and you've never had financial data before, you're going to start from scratch. So we're going to start this spreadsheet from scratch. So essentially, we're going to start with cost of sales. So cost of sales is the cost of getting your goods to your consumer. Okay, so let's say, for example, for a beauty product, it costs you 150 Rand to manufacture and another 50 Rand for packaging. So that's 200 Rand for one bottle. Okay, so your cost of sales would then, I'm going to just put in here 200 Rand, but you sell it to your customer for 500 Rand. Okay, so there's a 300 Rand markup there. So generally, we start with cost of sales because cost of sales will determine what our sales figures potentially will be based on our markup percentage. Okay, so here I'm going to just take the data from my template and put that in here. Okay, so, oh, this doesn't look very fun to look at. Let's quickly format all of these cells. I'm selecting everything that I want to format. I'm holding down the mouse, selecting the cells, and I'm going to go to the number formats. I'm going to drop down up here and I'm going to say currency. Okay, so let's assume that this business has a markup of sort of like 67%. Okay, we've kind of rounded it out there. Okay, so once we have our cost of sales in and we know what our markup is, we can forecast our income. Okay, And you can see in this business, it has seasonal business. So you can see it fluctuates and it drops quite considerably. And you can see it has its highest sales in October, November, December. So you know your business best. But if you know you're seasonal and there's months where you'll have higher income and months where you'll have lower income, it is better to forecast more accurately than to take what you anticipate to have at the end of the year, let's say just less than R1 million, and divide it by 12. It's not going to give you a very good or a very accurate month-by-month reporting. Try to be as accurate as possible when forecasting your figures, whether it be sales, cost of sales, or your operating expenses. Be accurate down to the month. Okay. So here we can see, we know what the costs of sales were. We worked out what the sales are going to be, and we basically have that. So let's quickly sort out our totals here. I just want to make these a little bit more distinguishable, and I'm just going to make these bold. I'm using auto sum. There is only one line, so you only need to include one line. That's fine. Please, 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 if you have different revenue sources and different cost of sales for the different revenue sources, please include them here, okay? It's very important for decision making that you can accurately see budget versus accurate figures. Let's say, for example, this business had 2 or 3 other revenue sources, and one of those revenue sources was maybe 1 or 2% of total revenue. That business might want to look at that revenue source and look at the costs involved in getting that to market. And they might decide the cost does not really help the business in the long run to have 1 or 2% extra in revenue. Okay. However, business may see that 1 or 2% of revenue total, and they may say this is critical because this small revenue source actually drives our primary income source. So maybe some people sell something that people have to upgrade, or you have value added sales. So you know they're going to spend more money with you because they bought this lower cost item. Okay, the data is critical because you can't make those decisions unless you have the data. Okay, you with me? Okay, here again, cost of sales, just one line item. So we're just using the auto sum function there. And you'll see I'm not going all the way to the total line item here because we use a different formula there. We will get there. So gross profit is your total sales minus your cost of sales. Okay. If you're in a service related industry, it's highly unlikely that you're going to have very high cost of sales. Maybe if you sell certain reports or whatever, and there's a cost involved for that, maybe you might have a small percentage of cost of sales, but you're not going to have many. It can be normal to have no cost of sales in a service related industry. Okay. Other income. Discounts allowed. That's where you've paid your supplier and they have granted you a discount. So your bill was 500 Rand and they said, okay, well, you paid me within 30 days, so you can pay 450 Rand. That 50 Rand is other income in the business's hands. So that's what a discount allowed is. So that gets reflected in the top here. If you're a new business, you're not going to really be able to forecast that unless you have structured contracts with your suppliers that actually specifies the value of a discount versus the amount you spend. Okay. Interest received. If the business has a 7-day or 32-day account or some sort of bank account that generates interest, it's also allocated under other income. But again, if you're a new business, you don't have that income yet, it's very difficult to forecast interest received when you don't know what your income is and you haven't put any money away in savings yet. So essentially, these could be 0 for right now. And we're going to use the auto sum function again. And I'm just dragging this formula across. So you click on the cell of the formula you want, bottom right-hand corner, little black cross, click and hold and drag it across. Excellent. There we go. Expenses. Okay. These are variable and it will depend on the business itself. So certain businesses will spend a large portion of their budget on advertising. Other businesses rely solely on word of mouth, and they might do the minutest amount of social media marketing. Okay. Bank charges for a new business, I highly doubt it's going to be this high. If you have a new business bank account and you have a fixed rate, this can vary anywhere from 85 Rand per month to 500 Rand per month, depending on the business bank account, but we're going to take 85 Rand for now. Cleaning, again, depends on whether you're paying a cleaning service, whether you rent your offices, it's going to be dependent on that. If you have a home office, right, and a portion of your spend is cleaning the office space. So 15, let's say your office space is 15% of the total home size, then 15% of the total cleaning supplies would be entered under this line item, cleaning. Okay. Computer expenses. Computer expenses is not subscriptions. Computer expenses is not your Microsoft 365. It's not your Sage accounting subscription. If it's got a monthly recurring billing, it's got to come down here to subscriptions. Computer expenses is like buying a mouse pad, buying a replacement part, those kind of things. Anything over 7,500 is not an expense. It's capitalized, and we'll talk about that in another video. Okay. So this here, you can see it's got a fixed amount for the whole year. So it can happen when forecasting, because computer expenses, you don't really know what's going to happen. So you put in a varied amount for the 12-month period, so that you've at least got a figure in for computer expenses. You also don't know which month your computer expenses might incur in, so you're going to just then take up the total amount and divide it by 12 months to get some sort of average. Okay. Depreciation. Depreciation can only be included if you have an asset. So let's say when you started your business, you bought a laptop, and that laptop depreciates over 3 years. Okay, so how that depreciation works is, so you bought a laptop for 30,000 Rand, and it depreciates over 3 years. That's 10,000 Rand per year. Now we're in a 12-month cycle, so we divide it by 12, and that gives us a monthly amount that we can use. Okay, so let's use that monthly amount. You can put that in there. And that's your depreciation for your first 12 months. Depreciation can also change. If you are a qualifying small business corporation, it will change this amount significantly. So please be aware when factoring in your depreciation costs, okay? On the safe side, for forecasting, forecast as if you weren't a small business corporation, if that makes sense, okay? Entertainment. Entertainment, be very careful what you put under entertainment. SARS does not like this account. Entertainment is if you were to take a client out for dinner, for lunch, for coffee, for sales. So for me as an accountant, I worked from home, so I'd often meet clients at a coffee shop. We'd have lunch. Those kind of things are client entertainment. If you're going to be posting anything to your client entertainment account, top tip, keep the slip, write the client's name on it and their contact information. SARS can ask for it if they audit your accounts. Okay. Equipment rental. So if you don't want to lay out costs for, let's say for an example, an inverter or for computer equipment, and you have a much smaller budget, and you actually just want to rent those items from a company, that is equipment rental, and that goes in here. If you buy it outright, it's not rental, then it's either an asset or it's an expense. Okay, so we've got in here equipment rental. Let's say that's for an inverter. General expenses, again, not ideal to use on a regular basis. It's really where there is no other classification, and it's more ad hoc expenses. So again, the same as with the with the computer expenses, we're going to put in the same amount over 12 months, just because we kind of got a general idea of what we might spend here, and we're just dividing it over the 12 months. We don't actually know at this point. Okay. Insurance, you should know your insurance ahead of the 12 months, and you should also know when it escalates or when the increase happens. So if you have business insurance, you know what the amount is, and you also know when it escalates. So let's say here in November is when they do the escalations. You would then make sure that you adjust November, December onwards with the escalated price. Interest paid. Interest paid is where the business might have an overdraft facility, a credit card facility, or anything like that where you're paying interest to the bank, or maybe you had an investor and you're paying back interest. You can see this is a very small amount, so this is likely interest on an overdraft. Again, this amount will vary, but in the beginning, you're not going to know what it is. So again, we take an average amount for the year and we divide it over the 12 months. Printing and stationery is quite broad, because it's literally anything from like the batteries for your mouse, paper for your printer, printer cartridges, toner, whatever that may be, pens, notebooks, all of those things in here. Again, you're not going to know when you need the things. So you take an amount that you expect to spend for the year and you divide it over the 12 months. Okay. Once you have historical data, so once this becomes actuals, you will see when you buy stuff and when you don't have an expense, and you adjust your future forecasts according to your historical data. Professional memberships. So if, for example, as an accountant or a tax practitioner or an attorney or building and construction, you may be required to belong to a professional body, a recognized controlling body. You may be required to do CPD hours. This is where that comes in. So that's professional memberships. If it's not a membership to the Bryanston Country Club, it's not a membership to the Johannesburg Country Club, that's not the kind of professional membership we're talking here. Okay, this is not your BNI membership. BNI membership is a subscription. Okay, this is professional, meaning belonging to a professional body. If you don't have to belong to a professional body, then you absolutely don't need to forecast it, and you can actually take this full line item out. Repairs and maintenance, again, one of those things you just don't know when things are going to come up, so you kind of average an amount for the year and you divide it up over the 12-month period. Small assets are things, anything that's less than sort of 7,000 Rand. Small assets in an office that don't fall under computer expenses. Small assets is a nice account to use when you want to be able to report on assets that are less than 7,000 Rand. So if you dump everything in computer expenses, it's going to give you your mouse pad, blah, blah, blah. Whereas, for example, if you bought a monitor for less than 7,000 Rand, you want to keep track of it. So you use the small assets account. Okay. Also, if you have to replace batteries for your inverter, those kind of things to keep track of, you use the small assets account. You don't know what it's going to be going into this year, so kind of average it, what you might spend for the year, and again, divide by 12. Staff welfare, tea, coffee, milk, sugar, water, those kind of things. So if you are working from home, or you've started a new business, just think of when you went to an office or to work for your employer, what things did they give you in terms of refreshments? Okay, they provided tea, coffee, milk, sugar, those kind of things. So those are the kind of things that you can put under staff welfare. Okay, subscriptions we've discussed quite a bit. So that's your Microsoft 365, your Sage, your Xero, anything that's a recurring billing. If you subscribe to a specific business memberships such as NSBC or SME or specific newsletters that have a cost involved, that will land on the subscriptions account. Telephone and internet, cell phone, landline, fiber, all of that, one account that's in here. So generally you might have a cell phone or whatever on contract, and you will know the amounts ahead of time. If you're on prepaid, you can kind of average based on what your usage has been in the past. Training is any kind of staff training that you might do. So for you as the business owner, if you needed to do training to upskill yourself on financial management, if you needed to upskill yourself on marketing, if you needed to upskill yourself for computer courses, that's training. If you have staff and you need to send them on Sage training, that all lands in this training line item. Again, when you're starting, you may not know ahead of time what you're going to spend. It is a good idea to factor something in for the year because it may come up. Okay. Then whether you have employees or not, if the directors take a salary, this should be recorded here. So as your business grows, there will often be a different line item for employee costs. That would be the employee salaries, and then a separate line item reporting on the director's salaries. However, often small businesses, the directors don't take a fixed income and they actually declare a dividend. So that may not necessarily be here, but if you are wanting to take a salary, this is a good place to add it in here. Okay. Don't forget to factor in, if you do have employees, that you will be liable for UIF if they work more than 24 hours in a month. And as soon as you have one employee, you become liable for Workmen's Compensation Fund. Okay, I've grouped all of these under home office expenses, but these don't have to fall under this. It can all go under rent paid if you actually rent an office space and it's just one line item and it includes all of this. If you have a home office though, you do want to separate it out between these different costs and a percentage of the bill. So like I said before, if your office space is 15% of the house, 15% of all of these costs will be factored in here. Okay, so there you have that. So let's quickly tally up our expenses. Okay, so we've now only gone to this first space. So I'm going to hover my mouse over this top right corner. I'm going to get this little arrow. I'm going to drag this right up to our first expense line item, and we have that there. I'm going to copy this formula across to there. Our net profit before tax is gross profit plus other income minus expenses. Okay. Copy this formula across. Income tax, we don't know that yet, so let's just quickly see. And then net profit after tax will be net profit before tax minus the tax, and that's going to be carried across to there. Right, let's go put our totals in. I'm going to use this auto sum function. Okay, I'm going to go Control C. I'm going to right click. I'm going to say paste function. That's the little clipboard with the little FX on it, function. And then I'm going to click F4. F4 repeats the last action that I did, and that was paste function. And I'm going to just carry this all the way down. Okay, so tax-wise, if you are a small business corporation, this is zero tax. Okay, if you are not a small business corporation, your tax is 27%, which is the 16,000 Rand, and we want this equals this divided by 12. And we're going to factor this in here. Okay, so here we have the basic template. I just want my gross profit to stand out a bit more than the rest, and both these as well. You can make them any color you want, it doesn't really matter. Okay, so you can see net profit before and after tax down here. There's some negative figures. Okay, if we have negative figures in our spreadsheet, we really want them to jump out at us. Okay, so we're going to do conditional formatting. I'm highlighting the entire data set here. I'm going to click on the top here where it says conditional formatting. I'm going to say highlight cell rules, and then I'm going to click less than. Anything less than 0, I wanted to fill it with light red and dark red text. Okay, you can see it stands out now. You can see there's negative amounts. Okay. So here we have a fair amount of gross profit, but we do have a lot of expenses. So in January and February, we're actually running at a loss, but overall we have a small profit. Okay. What this might mean is you'll be fine at the end of the financial year, but you need to be careful of your cash flow situation in the months leading up to January and February. Okay, if you run a purely cash-based business, meaning your customers pay you up front and you pay your suppliers as soon as they deliver, there's no terms, no 60 or 90-day terms, you're a cash business, which means the cash you've received in is what you're going to be spending out. Okay, if you don't hang on to the cash from October, November, and December, you're going to fall short in January and February. And what that means, something in these months under your expenses needs to go. Okay, so you need to be very careful when you see negative amounts in your net profit. So that's basically it. That's your business budget forecast. It's really simple to do. It's really just remembering to focus on accuracy. And I know in the beginning, when it's your first year, you probably don't know what you're going to spend much on anything. If you're not sure, take an amount and annualize it, divide it by 12 months, and at least factor something in. So rather in your initial forecast, factor in something rather than nothing. In this top half, try to be as accurate as possible. Know what your cost of sales are so that you can work on your markup and your gross profit to make sure that you can cover all of your operating expenses. So I would say if in totality, the bottom line here of this small net profit after tax was a negative, I would say you're going to be running into a problem. So a lot of businesses, especially in their first and second year, will likely have a loss before they have a profit, okay? But remember, because you're a cash business, having a loss in your first or second month means that some of your expenses aren't getting paid in terms of cash, okay? The next thing we're going to look at is taking this data and transforming it into a cash flow. Awesome, great. Guys, thank you, bye.